It's about that time of day again. Welcome back to your nightly newsletter, boys and girls. Joseph James here. Thursday evening, April 28th, 2016. Wrapping up the final few drops of the month of April 2016. Another exciting newsletter in store for you tonight. Crude, S&P, gold, and euro on the schedule for this evening's video. All of our markets have bullish momentum leading into tomorrow's session. Crude, gold, and euro both trading inside channels, and the E-mini S&P is trying to recover from a nasty fall earlier today. What a market. We're going to look at that chart in just a couple seconds here. Before we jump into charts, before we talk about strategies for tomorrow, I do want to remind you the only place to watch the full-length version of this nightly newsletter is here on our trading blog here at sidewaysmarkets.com. If you're watching the video on our YouTube channel right now, there's a link in the description of the YouTube video. Follow it over here to my trading blog and join me here on Sideways Markets so you can watch the full-length version. While you're here, don't forget, grab a free pass. Come out and join me in the trade room as a guest. Lower left-hand corner, don't forget to join our mailing list. I'll send you an email every evening when the newsletter is ready to go. Below the video, you can download all the charts you see me using in tonight's video. You can have those charts ready for your own trading tomorrow. And of course, over on the right-hand side, I will encourage you to join our free trial. You can learn more about what it means to be a student, learn more about the strategies we trade here at School of Trade. And as you guys know, we're always here to help 24/7, 365 if you need any questions answered along the way. Hope you guys had a great week with me. Don't forget, no newsletter on Friday night. I'll be back on Monday evening with the next nightly newsletter. Got some more news coming out here tomorrow. Looking at the global economic calendar for Friday, April the 29th. I'm going to scroll all the way back down. Looks at that announcement from Japan last night. Really got things moving and shaking this morning. I think the S&P can vouch for that. Tonight, though, we get the PPI out of Australia. I do not expect that to be a major market mover, but we do have 9:30 p.m. Eastern time, right? Just a few hours from now. Big move. I wouldn't think with the news we saw last night. I wouldn't think the PPI is going to have things going too crazy, but you do know there is Red Star news tomorrow morning. Now, of course, tonight at 9:30 p.m. Eastern time. Moving forward here for tomorrow morning, we got some small numbers here until 5 a.m. Eastern time tomorrow. We get the EU GDP flash, HICP flash, and the employment rate at 5 a.m. tomorrow morning. So heads up tomorrow morning for all you European time zone traders, Asia, London session traders, 5 a.m. tomorrow morning. I'll still be catching some Z's here in Los Angeles, but I'll be up here a little bit later on for the U.S. session. Tomorrow morning, the U.S. session, we get 8:30 personal income. Yeah, we're not going to worry about the monthly GDP in Canada, but we will be looking to follow it up with the consumer sentiment number at 10 a.m. So be aware that tomorrow, guys, in the U.S. session, again, 5 a.m. for the Euros tomorrow, and then, of course, 8:30 a.m., 9:45, and 10 a.m. tomorrow morning. We got some news. I am anticipating tomorrow to be a relatively low-volume day, so be careful. Remember, we always talk about the end of the day, the end of the week, the end of the month. Well, guess what? Tomorrow is the end of the week and the end of the month of April. Last trading day of the month of April. And then we go into May 1st. Hope you guys have your Cinco de Mayo plans made. You don't want to be the last one to buy your bracelet, right, for next week. You know what I'm talking about, if you know what I'm talking about. So, of course, we've got the end of the week and the end of the month tomorrow. What happens at the end of the week, at the end of the month, is traders take bigger risks. Okay, there's this psychology behind at the end of the month. If you're way up on the month, okay, then you're trading with house money, which, by the way, I completely disagree. You're not trading with house money. You're trading with your money. So don't give it back to the market end of the week, end of the month, end of the quarter, end of the year. But there is a psychological impact to the end of the week, to the end of the month. We know that we have a little bit of, that again, house money effect. You're way up on the month or you're in the green and you feel like you can give some of it back. The other opposite to that, the polar opposite of that would be if you've dug yourself into a hole this week or this month, well, tomorrow is your last chance to make it back, especially if your clients are ringing your office phone asking for redemptions, right? So we know tomorrow is going to be low volume because it's a Friday. So get in early, get out early. I would imagine the London session and the morning session of the U.S. That means after 11:30 a.m. Eastern time tomorrow, pack it up and take off for the weekend because it's probably going to be pretty low volume. You're more than welcome to hold positions into Friday afternoon, but if you want my opinion, I would recommend no new positions after 11 a.m. Eastern time on Friday. All right, guys, be careful because you've either got big risks taken, lower volume in the afternoon, those stops are not going to hold. And plus, you've been working hard all week, right? Get out of the office, go spend some time with the friends and family you love the most, right? Those people that actually know you and still like you, right? Go spend some time with them tomorrow afternoon and instead of giving back your money to the market. How about some charts here? Starting out with crude, we'll go crude. We'll wrap up here with some crude, S&P, gold, and of course the euro. Crude oil is bullish, trying to finish rotation back to the highs of a bull channel this evening and complete a triple measured move tomorrow. But there are a few levels of resistance getting in the way that need to be broken first. Boy, this market feels like it is going to 50 whether we like it or not, but obviously we'll trade as we go higher here. The bull channel tells us to expect rotation back to the highs of the channel or look for a trap low below a prior support level before we make the next leg higher. The measured move was completed at 45.91 and will act as resistance before the buyers can try to finish a triple measured move up to 46.34. Buyers need to either get a strong breakout pullback above this resistance or they need to wait for price to trap low below support levels below, so they don't have to buy into this resistance area. Looking at this chart here tonight, relatively easy charts here this evening, right? Give you guys a break going to Friday. Technical clues, first of all, here we get a bull channel. Bull channels, of course, tell us direction. They tell us rotation, right? We're looking to go from the low to the high to low to high to low, back up to high. So right now, as you can see here, the bulls have recently come off the low. Where's their target? Back up at the high. Now, how can they get there? What are some options for as we're coming off the lows of a channel? There are ultimately two big distinct options. First one is a breakout pullback. That's one easy option, right? Get above that support area there. Another option, right, which is what may be the case here right now, is what we call a trap low. Go below a prior swing. As you can see here, there's this prior swing high, right? Prior swing low right there. Break below a prior swing, seller failure, and then back up. So either we go lower for a trap low or we push higher with a nice successful breakout pullback. Those are the best ways you want to trade a channel. And then as we get back up to the highs, don't forget for that double overshoot reversal right at the high of a channel. Whenever you look to sell the high of a bull channel or vice versa, buy the low of a bear channel, you want to remember that type of reversal is only going to be a 50-50 chance, maybe a 60-40 on a good day. Remember, guys, that's the difference between professionals and retail traders. Professional traders actually understand the difference between a 60-40 trade and a 40-60 trade. It all has to do with context. No signals, no indicators. It all has to do with what's happening leading into it, right? If we're seeing two-sided trading into the high, then there's much higher likelihood there's profit taking and a reversal. But if it just slams up to that high, then there's a lot less likelihood that you get a good quality reversal on it. Bottom line is 50-50 chance if you're selling in a bull market or buying in a bear market, okay? And don't forget, when you have that type of win ratio, we want to make sure we use that 1-to-2 risk-reward ratio, right? So make sure you guys have a much bigger target, twice as big than your stop loss. That way, if you take 100 of these types of counter trend reversal trades, again, in the appropriate context, we know that between commissions and losses, you'll come out ahead, right, in the long run. Now, with that said, the next clue on the chart here is the measured move. You can see that measured move here. Pretty easy to see that measured move. A up to B, B pulls back to C, and of course, C goes up to D, right? A to B, B to C, C up to D. Now, from that, we broke through it, pulled back, and that's where we get our triple measured move at 46.34. Now, first of all, the measured move level at 45.91, that is resistance, okay, until it becomes support. So it's resistance here overhead until, of course, we can break out, pull back, and use that area of resistance as support at 44.91. It's a little bit different, though, when we get to a triple measured move. Triple measured moves are a lot more reliable as resistance. In most situations, unless the legs of the measured move are really small, right? What happens is let's say, for example, we use this leg, 1 leg, 2 leg, 3 leg, right? Then those smaller legs, it's much more likely we break through, right, those smaller legs. But when you're seeing, especially on oil, between 75 cents and $1, those are pretty significant legs here. And so if we do go higher to a third measured move, right, we definitely want to use caution trying to break out, pull back above it. I'm not going to say it doesn't happen, because it definitely does. We've seen many scenarios of that this year alone in 2016, of extremely bullish markets or bearish markets that go through that triple measured move and keep going. Just make sure, though, that you remember most measured moves will double top. You're probably not going to get a reversal right off the first test of it. Okay, and then make sure you get that quality breakout pullback if you want to trade through that triple measured move. So as of right now, buyers want to see price breakout, pull back, right, to get up to that measured move, or sellers will be looking for counter trend, obviously, failure back at that measured move. What's up next? The triangle. This triangle is really a combination of some falling resistance trend lines from earlier in the day and a falling resistance trend line from most recently. This appears to be one of the big variables going into tomorrow's session. Now, with a triangle, let's talk about this real quickly here. With a triangle, there's a directional bias to it. And the most important thing I can tell you about a triangle, and I'll teach you more details about this in our classroom sessions, but most important things about a triangle is to look for a trap low, okay, look for a seller failure at the low, or a breakout pullback. I'm going to give you more details on this stuff when you guys come out and join as a student, but that's the basic premise of a triangle. Now, obviously, this triangle right now is a little bit different, as you can see. There's still a bullish bias to it. Okay, still got a bullish bias to it, but this triangle has a little bit different, as you can see, just a little bit different look to it. So with that said, now we look for, right, breakout, pullback, okay, above the high, or trap low. And of course, the trap low now is going to be back at some of these areas of support, right, trap low and go higher here. So that triangle, really, for the most part, it is resistance overhead until broken and used as support, okay, or it is support below, which you want to use for seller failure for a trap at the low. So you can see how that triangle can be used effectively. Here's what they want to see tomorrow. Bulls want to see a breakout pullback above that measured move, right? Breakout pullback above that measured move. What else they want to see here? Trap low below that triangle, right? Trap low below the triangle. Trap low below that triangle. Okay. What else you want here? Breakout pullback above the triangle. Same thing we talked about, right? Breakout pullback above the triangle. If we do end up rattling around here at the lows, breakout pullback above that triangle. Again, it's just resistance, right? So you got to get through that resistance and use it as support on the opposite side. What do the bears want to see? The bears want to see double overshoot at channel high, right? That exact counter trend reversal. Double overshoot at that channel high. There's one counter trend reversal. A double top reversal at the triple measured move. We teach all this stuff to all of our students, by the way, right? You don't need to know what they all are. We'll teach it to you guys here at School of Trade. And then what else? A breakout pullback below channel low, right? Breakout pullback below channel low. Whenever you have a bull channel like this, the only real safe way to use it for selling is going to be to break out below it and hold it on the opposite side. Now, again, with this type of environment right now, I would imagine anything that goes down eventually goes back up. So we're definitely keeping an eye out on all of these support areas waiting below, because this is where those bears are going to have to hold, because buyers are going to be hunting for those opportunities. Remember, as we pull back, we look for failures to turn into strength into pullbacks, and pullbacks back to the high. Don't forget, Trade Room opens up tomorrow morning at 8 a.m. Eastern Time, and we'll be trading this market live in real time. What's up next here? The S&P trying to regroup after an incredibly volatile session today. This thing looks drunk at the wheel right now. And we've got a recent double bottom reversal, picture perfect double bottom reversal at a measured move. That's telling us, right, the buyers have a chance to take